Hey traders, Jeff coming back to you on Friday, March 7th, 2025 for another edition of Full Throttle Traders Market Review. Today we're going to just kind of build off a little bit that we spoke about yesterday because the volatility continues. Now we don't expect it to stop overnight. We had a pretty high range of 21.7 volatility today. That created about a $12 move in the SPY. This is the type of market that traders don't adapt too well, and they find themselves giving more money back than they're making over a period of a week or two. So we want to kind of stop that bleeding for people and show them what's going on here, how to adjust to this market, and how to be able to put yourself in a position to take advantage of the volatility. Remember, volatility is your friend in trading, but traded more so kind of in the front end very fast. The market is having $2 and $3 moves in a 2-minute chart in 30 seconds. So you can't do that. You have to change your approach in the market. So let's take a few minutes, dig in, and we'll nail that for you. All right, Jeff, back at you here. Let's again take a look at the one-day performance of where the sectors actually managed themselves. If you remember yesterday, we were talking about technology, a big sell-off, or what we like to call a sector rotation. A lot of the tech has been rotating out. You don't have to look much further past NVIDIA, some of the big brand names, SMCI, and a few others to be able to see that without looking at a chart. But if you looked at that yesterday, the tech was down here around 3.3% on the low. Remember, last week was 4.5%. This week was about 3.5%. Look what happened today. We suggested a rebound is coming. Why? Because we were very stretched, moving away from our moving averages. We're going to take a deep dive into moving averages, where we are, and where we expect the market to kind of retract to, given the week that we just had. But take a look at utilities, had a nice high-profile move today. You also had healthcare that began that move higher in here. It's right down here. It actually backed up something in, but UNH, Walgreens, things like that began to kind of move higher. And then they were actually coming off the high, some of them, but then some of them were surging again. Technology finished today at around 1.23%. Energy was higher right from the get-go. Technology came in a little bit later in the day. So we'll take a look at the charts and bring this to fruition for you. Okay, so here's another look at the SPY. Remember, yesterday we were basically, the only evidence we had was this far right here. Now, the market's still actually going here as the time of this video for another couple of hours. We're already up to around 85.6 million shares. So you can see, the market's been definitely moving well above the average 50 mark of volume days here for the last week, pretty much this week, pretty easily. So let's break this down a little bit more. You can see the SPY in here yesterday. We talked about that bounce is coming. And, when you saw the market going down, you're saying, where's the bounce? It's there. You can't extend themselves that far away without having that. It happened to be late in the day that it did that, or at least maybe midday forward, but I think it's still got some upside. Let's draw some lines in here. I actually did already on the Fibonacci lines here. We were literally down here at about 11 o'clock this morning, down at 565 and change, 550, 565.63. And we rallied all the way back to 577. So we had a $12 VIG and only in about maybe 3.5 hours or so in the market before it pulled back just a little bit here. You can see that we went from here to here at 23.6 fib. Now, normally in a down market like this, the best bounce you can expect from that is usually a 23.6 fib bounce. I think that we've been a bit oversold even more aggressively. And again, with high volatility today coming in at 21%, I think it has a high pressure of an upside move. So my bet is that the 38.2, which is going to push around the 584, 585 marker, is where we're headed to. Now, again, we could come out with bad news over the weekend. Could be something to do with tariffs or maybe internationally, and we could move down again before this happens. So obviously no guarantees in trading, but I believe we're heading right back up to the 38.2 and maybe even spring through there. We'll see what happens if and once we get through that area. You notice we made the 8 came in quite a bit from yesterday, from here to here, made a pretty good chunk down. So we're likely going to be able to touch this 8 period moving average come Monday or Tuesday, and then we'll see what happens. Now, we don't typically V-bottom from these areas, right? You don't just kind of go from the bottom to the top. You come up, you touch it, you move back down, you put a higher low, you get choppy, you go lower again, and then you make a new high, then you go sideways, and then you break out. That's something like that, right? If in the event that it did do this, there's just major news in that. That's not usually done by the credibility of the stock or the markets, or it's just somebody coming out with Jay Powell mentioned about rates, or Mexico in line, Canada in line, and they don't have tariffs and all that things. All those things can change the factor of where this market's going. So we have to always keep that scope in mind as we're kind of planning out the next 1 to 3 days in the market or longer. Now let's take a look here as I draw this out a little bit further and show you kind of the market in the support points. So this is a pivot point based at 574.33. I'm going to put one more pivot lower. You can see right down here to 568.4 is where we went to in this level. Let me just draw this down a little bit and see that a little bit more. Right, and I'm going to do one more to show you where we actually went to. So the second support level, we actually went right down in here, 564.28. We went right down in that area of that support level. This is the Fibonacci line here. So we were closer to that line than we were that line. So I like to put these on there for a couple of reasons. It gives me another indication, because if this is a pivot line, this is a bona fide support level 1. This is a bona fide support level 2. It's just coming to the bottom here. This becomes the ceiling. It gaps up. It comes back down, touches the floor, the ceiling, and now it becomes a no support area. So we've come a long way to get into those lines, but that's where it sits at this point in time. Now let's take a look at the Qs real quick to give you a little more idea. This is going to be based on same thing, based on the tech market in here. Again, the Qs are a lower price stock, so it certainly has a different flavor as far as top to bottom in this. Let's take a look at that though. Top to bottom, the range of that today was 480, 493. It actually went $13 as opposed to the SPY went about $12, 565 to 577. But the thing I want you to notice is two things. I want you to identify where the 200 period moving average is. That's just a red line slowly coming up here. And let's take a look at the Qs and see how we are just now in tech getting back to the 200 period moving average. So that could still cause a issue for tech moving forward. And I think to hit here, I think the broader market has a better chance of breaking higher than the tech here in the short term, at least for the next 1 to 3 days. So anyway, you want to kind of keep things kind of your posture a little bit more, keep your powder dry in this type of environment until we kind of pick the directions. Now, when I was in the room today moderating, I was talking about this, and I didn't play off this, but so we are probably going to be in for, I don't know, I said a 20 point bounce, but you end up going about 12 points. But I said the conditions were right. Why did I think that? Why did I know that? And reality is, you never know that. But when you're down so extended in here, the market's going down even further here, you just know that a bounce is more than likely. The odds were greater of a bounce happening than not. And you can see a tremendous move up here. Now, we could have played that in hindsight, bought 1,000 contracts and played it and done very well. But again, there are days that might be down here that won't. So nobody would ever do that. But the reality is, this is a tremendous pullback here from the Qs. Just the Qs here is 540 on the high, and we're down here at 481. So we got a 60-point VIG. That's about 12% pullback in the tech or the NASDAQ here. It's a Q specifically here. That's big. And again, all of this is happening inside of that stage 3 we talked about yesterday here. So again, same thing applies in here. If I draw a fib line on here, I think we could probably see prices from here to here. We did come back. It didn't quite hit the 21.6, whereas the SPY did a little bit better than that. And the 38.2 is coming in here around 503. So I feel the same thing. We could still do it around 500, 503 also in this. But again, I think our biggest obstacle potentially is going to be how the price is handled around the 200 period moving average, right? Outside of news, this is a tough area to get through when you're kind of going back high. When the market's selling off, it goes through it like a warm bite of a knife in hot butter. When you're coming back up, trying to end in some sort of a kind of regression back up, it's a lot more difficult to handle that the 200. Once again, let's take a look at the SPY, get the idea right in here. You can see we're coming in there. So we had an easy part from midday. We still had a lot of pent up demand and momentum just pushing it through. It was much easier. We did kind of breach right through that 21, whereas the tech fell a little bit short of that down in here. So we'll see what next week brings. And hopefully we can find some good trades in there. Again, it's been that type of trade where we've been doing credit spreads in there, going out of the money, waiting a little bit further. As a matter of fact, when I look at this chart here and I look at these, let's just take the 5-minute chart. Almost inevitably, I tell our traders this. I said that first little move that you think is measured move here from here to here, and then from here to here, that is a measured move. It means the distance in price that comes from the top to that new pivot bottom usually will go down again. So you see how volume came in here? A lot of traders got active right there. And I was like, no, 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 this is not necessarily going to be the bottom. It could have been. Believe me, I've been in a situation where it has, but it could have been. But look what happened. It came back in again. It's that second or third time. It did it again. Not quite as fervent in here. And then it touched again. This was the one that set it off that third time. So if you're the type of person that see that trades that first breakout, that first pullback, that first intuition to go along after a pullback in this example, if you just wait for the next one, your odds are going to increase greatly. You're going to miss occasionally one in here, but you're going to pick up probably 70% more are going to drop. And then you take the next lower high, and then you begin to kind of look at opportunities down in here on the smaller time frame. So that's the 5-minute chart, and you'll see pretty much the same thing on the hourly chart. That's the dip into here, and then the retest and back up into this area. So anyway, I hope you guys had a good trade day. It's definitely a different type of market that we're in these days. That we came right out of the top here, being somewhere around a 15, 16 VIX, running around through $2 to $3 a day. $12 to $15 a day is nothing. Let's actually take a look at that real quick as well. The VIX in general, you can see where I have the pivot lines in here. See where it's struggling at the top here? That pivot line was drawn right in here, 24.39. Look at the struggle. Now, to be fair, that pivot line is still about $3.50. So it's not easy to judge where this may top or bottom based on the VIX alone, because the ranges get top. Down in here, it's a lot easier. Anything underneath around 18 to 20 is okay, but 20, 25, these are $3 to $4 ranges. This is more the yen carry trade back in here, so it's got a lot more to it. So anyway, same thing applies though. We're definitely getting extended to the downside. I think we're going to hit that wall of supply down here, or at least demand down here, and they're going to start buying this market back. To what degree, we don't know, but we know for the 3 to 5 day outlook, we should see prices begin to kind of stimulate here and just work its way back up, albeit choppy, maybe not solid moves, but it should work its way off the bottom here in the coming days. You guys have a great weekend, and remember, Full Throttle Traders, we don't trade what we think, we actually trade what we see. Have a good day.